everybody. We're back for our chart of the week, and actually, we're going to be changing the name of this to the EO featured chart. So, hope you guys like this one. We're going to be talking about the VIX. The reason why we're cutting back on the name here is because we're cutting back on the charts. Going to be probably doing these more likely once or twice a month as opposed to 4 times a month. But we're going to try to focus on a little bit more quality stuff as we go forward here. So let's talk about the volatility index, or the VIX. It's had quite a move here the last 5-6 sessions. So let's see if we can figure this one out and perhaps put a trade idea together. So I don't have to tell you that a big move in the VIX correlates with a big move in the market. So when the VIX is rising sharply, as we see it is right here, that tends to tell us that markets are probably going the opposite direction, going down. The VIX has climbed from about 12 a week and a half ago to roughly 24. So that's about a 100% move upwards in volatility. That is a stunning move in such a short period of time. But it's not unprecedented, right? We had very, very large moves in volatility about a year and a half ago, February of 2018. Some of you might remember that. The VIX went all the way up to 50. We were in the teens in January. And just in a few short days, the VIX traveled all the way up to about 50 or so and fell all the way back. And then we go back to December. Everybody remembers the markets getting pounded back in December. And we had a move from the VIX from about 17 or so all the way up to 36. So it was also another 100% move. And then it started to glide all the way back down. So is it going to look like this on the right-hand side of the chart? We don't know, right? We don't know where this is going to stop. We do know that there was a heavy bout of selling these last 4 or 5 days. The S&P 500 was down, crushed, well over 90 points on the close. It actually was up over. It was down over 100 points. The S&P 500 was on the futures. The S&P index was down 87. The Dow was down at one point over 800. It closed down 767 points. Quite a move. Almost 3% on all the indices across the board. We do see some signs of acceleration over here, but that often means that in the VIX, that probably tells us that sign is of exhaustion here. Relative strength is peaking here above 70, and we know that the last couple of times it got up to that area, it came right back down hard, and the markets rallied upwards as the VIX started declining. Right? The MACD is actually on a buy signal from a few days ago, and again, that's another area where we could find some exhaustion as well too. Now, trying to nail me on how much further this VIX is going to go up, forget it. But if we do peak here, okay, we do peak here at this high, and we come down sharply here over the next couple of days, it's going to be a really powerful rally. I did tell everybody in the chat room that within about 4 or 5 days, there's going to be a big, sharp rally. If we do get something that looks something similar to this, if we come back down even to 17, 18 level from this 24, that's going to put up some nice numbers for the bulls over the next couple of days. But don't be complacent here. Let's be of the understanding here that volatility has started to ratchet up again. Whereas back in this area here, in May to June, May we had some modest volatility coming up. June was way down. July was actually even further down. When we have increases in volatility, we see big ranges for stocks to go up and down. That includes the indices. So we may as well just get used to triple-digit moves in the Dow Industrials over the next several weeks until volatility starts coming down. So that's the VIX volatility index. Thanks very much for watching, everyone, and I'll see you guys next time.